Hey everyone, Rose Brown, the accountant therapist here, and in this video I'll be targeting the 1099 NEC, which means non-employee compensation, right? And I'm really looking at it from the employer perspective. Now, a 1099 NEC is issued to independent contractors. Independent contractors are folks you've hired to do some sort of maybe a project or a short time based work, anything that is outside the capacity of an employee. Now, once you've identified that I do have an independent contractor, you then need to now determine, well, how much did I pay that individual throughout the tax year? Because there's a threshold for the requirement of the 1099 NEC. So the threshold, as you can see here, is $600 or more. So if you've issued that person $600 or more, you definitely need to make sure that they receive a 1099 NEC. Now, if you've paid them less than $600, you don't have to worry about filing a 1099 NEC. What happens then is you just make sure that you've tracked everything internally and you know at any given point, well, this person, I know how much I paid them, but it's just been less than $600. Okay, now you've identified your independent contractor, how much you've paid them, and now we have to look at the due date. The due date is January 31st of the current year for the prior year. So you want to make sure that you don't miss this deadline because the penalty and interest can really add up to be a lot. What I also want you to understand is the flow of this little diagram here, okay? An independent contractor who's hired by a payer or an employee, they need to complete and sign a Form W-9 and give it to the employer. Now, the employer at the end of the year needs to issue a Form 1099 NEC by January 31st to that independent contractor. If these things don't happen, what happens is the employer says, I've paid this person under the table. And when you pay someone under the table, you end up paying their taxes for them. And I'm sure we don't want to pay taxes for people, right? So if you've issued a 1099, you're telling the IRS, I've paid this person and I'm taking a deduction for it. Now, once that 1099 has been filed with the IRS, and this individual receives it, they report it to the IRS. Now, when they report it, they're saying, hey, I've received compensation. Now I'm reporting so that I can pay my appropriate amount of taxes on it. So you can see how important this flow of documentation is, because it then determines who's gonna pay the taxes, who's gonna get the deduction, those sorts of things. So at the end of the day, we need to identify who, what, and when. Okay, I hope that was helpful. I know it was a lot, but you want to make sure as an employer, somebody hiring independent contractors, you are covering yourself from a due diligence perspective. Compliance is critical, and really just to make sure you're getting your tax write-off. I mean, how many of us want to pay taxes for somebody else? No, you're in business not to pay taxes for somebody else. So ensure that you're documenting everything that happens so that you can enjoy what is rightfully yours.